OmiseGo. So guys, we're gonna take a look at OmiseGo. Now everybody stand up. Just make sure you're commando. Flap your hands in the air and do the fandango while I inject y'all with knowledge full of embryo. By the time I'm done, you'll have an afterglow. Am I going too fast? You guys okay with this allegro? Or would you prefer me like this with a high falsetto? Now everybody, sit back. Grab some pistachio, get some sweet potato, add a little bit of oregano. Let me beat down this chart with my longbow. Hit it once, hit it twice, hit it thrice with my combo. Is it a coin you'll have to forego? Bullet tank so far like from Canada to Idaho. No, it's a coin so hot just like Marilyn Monroe. Drop the mic. Okay guys, time to get serious, okay? So just to finish up where we left off yesterday, I suggested basically, I'm not going to play the video for the sound, but what I suggested yesterday was a really good setup actually, right? I suggested a risk to reward ratio of about 3.52, and I expected it to break outside of this wedge, which surely enough, if we do look at it, it broke out of this wedge, right? Now the risk to reward wasn't that great. I mean, it only went up about 6%, but guys, if you played a, I don't know, say a $2,000 position there, and you made 5% on there, you would have made yourself $100, guys. It's still money, right? And that's what I wanted to focus on. And now, I think I have the wave count done now, okay? We're not gonna make this video too long. It's just a quick update that I'll be trying to do daily. So what ended up happening was, I thought it was gonna get down a little bit lower, but it broke out anyways, right? And the way you would confirm that it broke out was, let's say you guys draw this wedge in here, okay? We all see this wedge, right? It's definitely wedging in here. Let's go to a better time frame. For example, this one here, the 30-minute chart is a perfect chart. Do you guys notice that where we're drawing the wedge really matters, okay? For example, on the 2-hour time frame, right? If we draw our wedge like this, it looks great still, right? Just in this area right here. Now let's change this to green. Now in this wedge here, the 55 moving average is all the way up there, right? But if we look at it on the 30 moving average, or sorry, the 30 moving average, if we look at the 55 moving average on the 30-minute chart, what do you guys notice? You guys notice that the wedge happens to also break out exactly guys, where this is right here, where the 55 moving average is. So although I suggested that it might have came down a little bit lower, what I would suggest doing in the future to confirm it is to have trigger charts and correlate it and have confluence with every other chart as well. So for example, if you look on the 30-minute chart here, how would you have confirmed to go into an uptrend? Well, let me show you guys, okay? The way you would confirm it, first of all, is you would see a more of a spike of a volume, right? Volume is lower, but this one right here, here's my rule that I always follow, right? One, try to find a candle that closes with body in between the EMA, the 55 EMA to be specific. So that's criteria 1. Criteria 2, next candle has to successfully close above the 55 EMA, okay, with volume, with more volume than the previous candle. And do we meet these two criteria? Let's check it. So 1, the body can be in between the 55 EMA, and most importantly, I'll write the third rule, okay? Of course, it has to break through the resistance line. So the resistance line is clearly right here, right? We can draw it from this point and this point, as I indicated in my previous technical analysis yesterday, right? So the candle can be in between the body of the 55 EMA, and then the next one here, the candle has to successfully close with volume above it. Even though it was rejected, that's fine, but it also has to break the resistance line, and it meets all 3 of those criteria with that tiny spike, right? So what you would want to do to just take a chance, since it actually did break the 55 EMA, right? What you would do is go into a long position. I can't believe I called this yesterday. It came true. The only thing I'm disappointed about is that it didn't come down a tiny bit lower, but that's fine. That's how we confirm it, okay? So what you would do is you would target the next point, about right here, or even up here, okay? But the best thing to do is this right here. you take the base of the wedge, the price range of the wedge right here. So that's clearly about the size of the wedge, right? And you just move it over and you set it as a reasonable target right there. Usually it will travel to about the distance of the wedge. So you take your stop loss, you set it slightly below the 55 EMA, okay? That's really important. You set it slightly below it, and then you target the same distance as your wedge right here. And check out that risk to reward ratio. 6.6, guys. That's phenomenal. So how is risk to reward calculated? It takes the price of your target, you subtract it by the price of your entry, and you divide that price by the difference between your entry price right here and your stop loss, okay? So once again, you take your, but it all does it for you, but just in case you guys are curious about the formula that they use, it's your target price minus your entry price, and that price right there divided by the difference between your entry price and your stop loss, okay? So if you set your stop loss slightly below there, well, that's a phenomenal risk to reward ratio, right? And what you would do is you would be very, very unemotionally attached, okay? You cut out all your emotions and you stick to this risk to reward formula and you do not waver from it, okay? Because it met all those criterias of actually breaking above the EMA already, then you know that you're in a pretty good position. Not only does it break above it, right? But think of this like a hockey game, okay, guys? Think of this like a hockey game, and there's two teams, the Bulls and the Bears, okay? Well, here, if we look at it, are there long wicks to the downside? No, there's not really a lot of wicks to the downside, right? Not at all, actually. Are there a lot of wicks to the upside? Like, for example, you know, this one, this one, this one, this one, this one, this one? Absolutely. So what that means is, in a game of hockey, the Bulls are actually on the offense right now, okay? They're on the offense, and the Bears are just pushing it down. They're on the defense, okay? And they're defending okay. But are the Bears on the offense? If they were on the offense, you would see a lot of wicks poking to the downside, right? You'd see a lot of wicks poking to the downside, but no, they're not on the offense. The Bears are just playing defense, and that's it. And do you guys know what happens against a really aggressive team if they keep pressuring you and attacking and trying to be very offensive? Well, the Bears eventually give up. Does that make sense, guys? Just think of any game, right? You play both offense and you play defense. But clearly the losing team will only play defense, right? And it shows by having no wicks poking down really. A tiny bit, but not much. But the Bulls are trying hard. They're pushing it up. They're pushing it up. They're pushing it up. And then eventually the Bulls, they win. They win with this massive green candle right there. So that is how you would confirm that trade that I called out for you guys yesterday, okay? It was a really easy call because you guys know how I feel about wedges, okay? You guys know how I feel about falling wedges, which I always say. You got one like that, then you got one like this, okay? So you basically just do a 5 count normally. If this one, it was really hard to count. I don't think we could have really counted it, right? If we had to, it might have been something like I don't know, like say 1, 2, maybe 3 here or something, then 4, and then I don't know, 5 about right here. It didn't quite touch the points as I wanted it to, but it did a fairly decent job, I'd say. A fairly good job of doing it. So here you usually have 5 points like this, right? 1, 2, 3, 4, and then 5, and then it comes down. And then for this shape right here, you have 1, 2, 3, 4, and then 5, and then it breaks out. This one was really hard to count, to be quite honest, but nevertheless, when we use this strategy of mine, okay, the body can be in between, that's our criteria, and the second one, right, it has to close successfully above the 55. 55 is a key number, okay, guys? I'm going to show you guys the significance of Fibonacci numbers. Okay, so here's the Fibonacci numbers, right? Here's Fibonacci numbers. 55 is a Fibonacci number, and just the way it's actually tuned and to charts in general, I use moving averages 8, 13, 21, and 55. They're my favorite numbers to use. So this one right here, if we double click on it, we can actually change the length of it which refers to the number. So I love 55. People use 50. Let's see what happens if we change it to 50, for example, okay? Right? It's all right, looks okay, but I just prefer 55 in general because of the theory behind Fibonacci numbers. So this one here closed higher than it with volume. So go in the trade. Always go in the trade, right? And then just let it hover. Big whoop if you guys lose, you know, for example, this one here, you would have lost 0.076 of your money. But because it had such a high risk to reward ratio of literally 6.85, guys, that's amazing. It's amazing. Let's put that into perspective, okay, guys? Let's put this into perspective, what risk to reward 7.1 is, okay? Risk to reward 7 to 1, okay? And you guys know my favorite example, which is coin toss, okay? Heads or tails. Let's say you're playing with, I don't know, $100, okay, guys? You're flipping a loonie, okay, whatever. Flipping a coin, and every time you win, like you're playing against your friend, and if you called it, every win is equal to, because of 7 to 1 ratio, we'll say $70, okay? We'll say $70, but every loss is equal to $10, which makes a ratio, risk to reward, of 7 to 1, okay? 7 to 1 right there. Now, out of 10 games, let's just use an example, okay? We want to assume a few things first. One, the percentage of your win is always the same. Okay, the percentage of your win is always the same. And two, it's the same position size. Out of 10 games, even if you lost, say, let's say at 10 games we go 3 wins and 7 losses. Okay, now 3 wins at $70 each is equal to how much, guys? $210, right? Now 7 losses at 10 each is equal to $70. What's your total profit? Total profit is equal to $210 minus $70 is equal to $140, guys. Even if you had a 7 to 1 risk to reward ratio every single time, I know it's really rare to find these kind of setups, guys, but that is the trade that I was talking about yesterday with such a high probability to win when it breaks out of the wedge. Not only that, the risk to reward is phenomenal, right? So if you guys actually took a 7 to 1 risk to reward ratio every time, which is really hard to come by, right? You would have to lose like 8 games, guys. You would have to lose 8 games, which would be an $80 loss, right? Actually 9 games pretty much. You'd have to lose 9 games, which would be $90. But even if you won only 1 game and you won $70, you're only losing $20. Now let's think of another scenario, okay? Let's say if it was 2 with 2 wins, okay? And that would be $140 still that you would win. If you lost 8 games, that'd be $80 that you would lose. Well, what's $140 minus 80? That's still a $60 profit, guys. So if you actually play the same position size every time, and there was the same percentage every single time, for example, out of 10 games, even if you lost 8 games and you only won 2, you still be ahead by $60 over 10 games. So this is how we trade, with just simple probability and just managing risk to reward, right? So this was a phenomenal trade, and I hope some of you took it. I personally did not trade it because I was busy with other coins there. I'm too busy looking at EOS, one of my favorite coins right now. But I'm done with her, guys. Her and I are breaking up right now. We're fighting right now, just put it that way, okay? So that would have been a great trade to take. Now, where are we in the count? First of all, let's look at some resistances, okay, that we were defining yesterday. So we have basically some major resistance areas, right? Basically, this is a major resistance, we can say. I don't know why I had 2 lines there. Basically, that's a major resistance right around here, right? We see it peaking this point, this point, this point, this point, and it finally, once it breaks the resistance, and this point here, once it breaks the resistance, what do you guys notice? There was too much pressure to go down. And because there was too much pressure to go down, it also tanked, right? But Bitcoin had to do a lot to do with that as well, obviously, okay? I want to show you guys in hindsight, right? the best way to learn is to look for places we could have made a profit, okay? So clearly here we could have made a profit, right guys? Here. So let me just give you another quick example of how to spot things. Might seem like random to a lot of people, but to me, they're gold mines, okay? And I've been trading these patterns for years now, right? Remember earlier I was talking about that pattern there? This is absolutely one of those patterns that I absolutely love to trade. And what do you guys notice, right? It basically coincides with the 55 EMA as well. And now the opposite applies, guys. The opposite applies, okay? So let's say that we're waiting for it to break out. Well, if it leaves this zone where it connects it, right? If it leaves this area that we see drawn and it breaks below the 55 EMA, great. Now this one meets the first criteria, right? It doesn't have the volume, but also at the same time, it has no volume to go up. So we can confirm a slight downtrend. So this one, the body is actually closing in the middle of the 55 EMA, right? But this candle right here, guys, this candle right here is one of my favorite confirmation candles, okay? This is called the inverted hammer. This is the inverted hammer right here. That is a bad boy. He's a bad, bad boy. So what this means is, let's say the 55 EMA is always a resistance, okay? Think of it as a resistance and think of it as a support. It's a key number that I use often. Some people may disagree, and that's no problem. To each his own. Different folks, different strokes, right? It's been working very well for me, so why would I stop using it? So what this implies is the bulls, okay guys? The bulls tried one more time, their last defense. Their last defense that they're trying, right? But hey, the bears won. The bears won by the end of the candle close, and they pushed it all the way down here. So it means, guys, the bulls attempted really hard to push it up there, but the bears pushed it all the way back down, breaking below the resistance line. So this candle is not enough for me to enter a trade, but this candle, that candle would have done it for me right there. So what you would do is you would take your short position tool, okay? You wouldn't have entered there. You would have entered probably as soon as that candle closed, okay? As soon as that candle closed, you could have entered a small short position, set it slightly above your 55 EMA, and now your target, guys. Remember what I was mentioning earlier about your base range? Take your base range right here as a semi-target pretty much. I'll be a little bit conservative, just like that, for example, okay? And then we're just gonna use our target from where it falls, around right here almost. Actually, this one might have been a little bit too big. I just wanna make sure it's actually fitting inside. Try to fit the whole thing inside, guys. The whole thing inside. Does that make sense? The box inside. So you would have set a target right around here. You would have dragged it down to right over here. And surely enough, guys, using that exact target, it hit right here. You guys could have gained yourself a really easy 6% gain just by following this wedge right here. And then right after that wedge broke, guys, we got another wedge, right? We saw another wedge forming immediately, basically. And we just take relevant points, right? When we have this point, and we have this point, we have this point, and we have this point, we can just start drawing the shape of the formation. And we do the exact same thing to right here. And total, you know, since November 2nd there, that's a 10 to 15% gain, guys. Those are small gains, and they really add up, especially that one there. So what do we have going on here right now? Let's take a look at it. So this is what I think is going on, okay guys? I think that this is point A, okay? Remember before, every time we have an X, we have an A, B, and C, right? We have, if this point was X, we have an A, B, C, and then our W, right, is also where C ends, and then we have X here. Now we're looking for an A, B, C, which we have. It attempts to break outside, but it doesn't, so we have another X location there. And then now we basically have an A, B, C, A, B, C. So if this was A, where this 5-wave formation formed, this is really small, but it's a very small 5th wave in there that we can call it. It's not that proportional, and I'm not that happy with it, but I'm gonna call it my A wave for now until there's further information. This one could be B right there, okay? And now it looks like we're just about to make a C position, right? Looks like it's about to come down a little bit. Let's look at some indicators, guys. So we look at some indicators, bearishly diverging, right? We look on the histogram of the 2-hour chart. Excuse me. It's still bearishly diverging, right? This is called a histogram, okay? Every time it's downticking more and more and more. That's how you can read the histogram, by even drawing a simple line through it like that for bearish divergence. So on the 1-hour chart, still bearishly diverging, kind of found support here a little bit in terms of strength. So what the RSI tool does, guys, is it gauges the momentum and how much strength there is in the market, okay? So here it was going down, and it literally tanked, guys. It tanked so hard. It didn't even get a chance. What I suggested was it might have even tried to make an attempt up to there. And if you guys remember yesterday, I put a box in here that was green, indicating a buy region, right? Because that's the end of the wedge. Well, it looks like it's still making its way down there. What I think is it's going to make somewhere like this. It's going to probably hit somewhere right here. Okay, so it's going to probably come down one more. And then, guys, and then finally, what we will have is our WXCY, sorry, CWXYZ correction that has now completed. And I know this looks like an absolute mess, but we have A, B, C, W, X, and then A, B, C, and then we have Y here, and then we have another X up here. We have another X up there, and then we basically have an A, B, C, where we have 1, 2, 3, 4, 5 in there. So this is what I think is going on. But regardless if I'm right or wrong, what we do as a trader, guys, is not try to predict, okay? What we try to do is react, which is a lot more important than actually predicting. Because if we keep predicting, we stay in the actual mindset of being biased to one situation, right? Or to one position. So what's important as a trader is to be flexible. So the people that are watching this video 6 hours later or 12 hours later, and they say to me, hey, you were really off. Well, I could be very off because of many reasons, which is you guys watched it a little bit later. And if I had more data closer to when you guys watched it, I'd probably be a lot more accurate. So this is my opinion, okay? That it's just doing a simple 3-wave down on the final C, which it actually finished already. Sometimes the C waves on the bottom could just be like that. And we have a very, very, very truncated one. So let's look at history, guys. A, B, C. C fell very short, didn't it? And now we have A, B, C. C basically fell right to it. So why would we be led to believe that the next C would be even lower down there? I don't think that would be right to assume that. So this one we got 4 hours left, guys, okay? 4 hours left, and or sorry, 1 hour left. Look at this candle's volume right here, okay? Right there, quite a bit of volume. We only have an hour left, and we're about halfway in the volume, so it doesn't seem like the volume is going to get there. But this one is called an inverted hammer. The inverted hammer, or sorry, not the inverted hammer, the hammer. The hammer implies that the bears, okay, you know, they're playing offense. The bears, they're playing offense. But what happens was the bulls, they successfully defended. Not only did they successfully defend, but they pushed it far back into their territory, right? So this is a very strong type of reversal candle. And what it looks like to me is I mentioned that once it touches around this particular area, just based on using it as a zone, right? You know, based on using it as a target zone right there. And let's see what else we can find. It's a pretty strong buy zone all the way to over here, actually, if you guys notice. Do you see this? I know it might be just coincidence that we're running through a few spots, but what you guys will notice here, stall, doesn't want to go down, right? In fact, they got pushed up. Stall, got pushed up. People bought in this region. A lot of people bought in this region, guys, especially here too. They didn't want to go down. So because of these points, this one, this is a good buy region, a really good buy zone that I just indicated. That's why it bounced off of here as well. That's why it's bouncing off of here as well right now. So what I'm led to believe is that this C correction is basically, I'm going to delete some of this to make it cleaner. What I'm led to believe, because we found out that C fell short there, C barely fell lower there. So this could be very well our C location where it also falls short. And we are finished the correction for now. Okay? So let's look at the daily chart, guys. This is absolutely uptrending, right? Even though it was diverging down here a little bit right now, what we do have to also make note of is that there's a bullish divergence here, okay? Bullish divergence all the way from here, actually, on a 4-hour chart, which is a pretty big thing. We look on the daily chart, guys, okay? We look on the daily chart, we see that it is bullishly diverging as well now. In fact, it is squeezing like this, right? It's squeezing into a symmetric triangle, the RSI, and that's actually still a pretty good sign. It looks like it wants to explode, doesn't it, guys? We're seeing it uptick. We're seeing it uptick on the daily chart, guys. It's slowly getting higher. It's not getting lower at all every time. It's getting higher, right? To me, this looks like it's going to do this. Doesn't it? Just extending the curve, right? Just assuming same symmetry. That's what it looks like it's going to do. We are upticking on the histogram right now as well. It's getting higher highs every single day, higher highs, right? And what we want it to do is get to the positive side. Right now, it's not going down nearly as much every day. In fact, it is slowly uptrending every day. Okay, now look at this as well, guys, okay? I'm going to show you guys some triangle patterns. So this right here, I'm just going to go to black screen. It's lesson time. This right here is bearish, okay? This right here is bullish. It's continuation pattern. So just as an example, this is bearish because usually what happens is, right, it's testing the resistance every time. 1, 2, 3, 4, and 5, right? Or not like that, other way around. I'm counting it, sorry. I'm Canadian, guys. Sorry, everybody. 1, 2, 3, 4, and then 5. And on the third one, it comes down. And for this one right here, it's the opposite. It goes 1, 2, 3, 4, and 5. So this one will break down, and then this one will break up. And we also use the exact same symmetry, right? The same type of base range. We take this base range, we take this base range. You guys can click on it, clone it, and just put it right there. This one here, the target would be for down over here. Or sorry, I'm doing it wrong. This one would be like that target, and this one would be down over here. I'm just kind of mixing up. So when it breaks out, you use this target right here as the same one as that one, okay? And then this one, you use the same target as over here. So when it breaks up, you go right there. And the reason why this one here is bearish is because you're getting lower highs every single time, right? You're getting lower highs every single time. In patterns like this on a downtrend, okay? You're getting lower highs every time, and it's just gonna break out. And here, you're getting higher highs every time, right? Or sorry, I'm saying it wrong. You're getting lower highs on this one, and this one, you're getting higher lows, right? So it's constantly testing the resistance every time, and it doesn't want to get lower. Whereas this one, the highs are getting lower and lower and lower, but it's testing the actual support several times, and eventually it'll break out. Now tell me what you guys see here. This is what I see. Would you guys agree with me? Pretty much? Okay. Would you agree with me that this is the shape that we see right now, pretty much? Right? If we keep all the points relevant, this point, this point, this point, around here as well, would you guys agree with me that it's getting higher highs every single time? Not only is it getting higher highs, but it's reaching a very critical buy zone right here. And this is a really important support level. I'm going to zoom out to the daily chart right here. And I'm also going to show you guys Fibonacci. So let's get our Fibonacci tool, right? And what do you guys notice right around this area? Okay, it literally just made one touch to the 618 level. And right here is the 0.5 level, which also happens to be a major resistance point, okay? So we are hovering between the 618 fib level and also the 0.5 Fibonacci level. Ooh, I'm so excited today. I've been gone for like 10 minutes and I just came back now. I know to you guys it's only been like a second or so, but I just had to check out my short position for IOTA. I shorted it since 383. It's already at 373 right now and I'm doing fantastic. And I shorted it because I did my technical analysis on it. I justified all my reasons why I didn't think it would go up and it was more likely to go down. If you can't think of a lot of reasons for it to go up, then there's a good chance that you can think of more reasons for it to go down, right? Sideways happens quite often, but usually you try to weigh it out on a balance beam, for example, okay? Think of a balance beam, and one side has the bears, one side has the bulls. Which side do you believe, and which side can you rationalize more to each side, right? And you just weigh the pros and the cons, and you think of which one has more strength and which one is weaker. And usually one side will be more likely to win, and then you can base your risk to reward off of that, and you can play based on probability, and you want to choose these as high probability setups, right? So if you think of a lot of reasons why it will go down more than it will go up, then that will definitely factor into your decision to play, right? And also it would be considered, let's say you think of a lot of reasons why it'll go down, right? Well, then it could be a high probability trade. And that's how a lot of people will assign weight values to probabilities, right, of it going up or down. That's what I do. I kind of weigh it in my head. Well, this one here is doing this one here is doing that. It seems like it's very likely to go down. Then I'll just assign some value to it after adding some weight to it. It's like, hey, maybe out of 10, right? It's like an 8 out of 9 chance or 8 out of 10 chance for it to go down. So guys, what I think right here for now on a 2-hour chart, we're going to summarize quickly. This candle just formed, okay, with decent volume. On the 2-hour, that's a nice hammer. On the 4-hour chart, pretty decent hammer already. We reached a really critical buy zone that we see right around here, okay? We conclude that C was truncated from A. We conclude that C here was basically on the same level as A. This one here is also near the same level as well. And this one looks like it just made a 3-wave correction. A 1, a 2, and a 3. And that can happen sometimes as well. This is called a 3-3-5 correction. Or sorry, a 5-3-3. This one could have, actually this one even might be a 3-wave correction as well. Basically something like that. This one's irregular. So look at this for a second, a green and a red. Why didn't I count that one, guys? Let me show you why I didn't count that one. When you have a green candle, and then you have a red candle next to each other like this, right? Both of these candles, because you first buy, and the next candle you come down, 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 down. Well, if you look at it, if you think about it pretty deep, what it's going to happen is only the bodies of the candle will show. Or sorry, only the wick of the candle will show because of overlap. So on a higher time frame, let's see if we can see it, like on a 1 day. So you guys see what I mean? Only the wick shows. That's it. So this could be a 1, 2, and a 3. That's why it looks just like that. So notice that it really doesn't want to go down anymore, guys. Like it just, on a 4-hour chart, like this hammer candle, if it can close with this candle right here, it's a very powerful candle. This one here, on a downtrend, we get sort of a hammer with a longer wick, but still because of the type of candle that it is, which implies that there was indecision in the market to go down further, then it went up, right? Just like right here, this long one right there, it went up. Let's see if we can find more hammers. Here on a downtrend, we get a similar candle, it went up. Here, went up. Even though this one's red, guys, it doesn't mean that a bullish candle is always green and a bearish candle is always red. Red candles like this one, depending on where they are, can actually be very, very, very bullish. And this candle, if you guys look at it, this one right here, do you guys see it as any different than this candle where we're at right now? No, right? So how could I be led to believe in any way that it's going to go down right now? when I combine all of my factors, right? I combine the MACD looking like it's about to go up here already, okay? Like look at the MACD, the histogram is looking beautiful. I mean, we might tick down just a little bit more, but that's okay. It's no problem at all. We already reached a critical point right here, really low, right? The 5-minute chart over here, it's already hovering the MACD to the positive side. I mean, the 1-minute chart, we're probably, yeah, I was gonna say, we're getting some nice RSI. Whenever you get an RSI range over 90, right? That's really bullish. Here's a bearish RSI. Let me show you guys, okay? Let me show you guys some bearish RSI ranges where it hovers under 60. Okay, that is bullish as heck right now. And it's even the 3-minute chart is definitely peaking, but what we want to confirm a high uptrend. So RSI rules, guys. Okay, I'm gonna write down RSI rules for you. RSI rules. Okay, bullish zone. First of all, actually, over 70 equals overbought. Okay, under 30 is equal to oversold. Now that is what the rule that everybody knows, but there's much more to it than that, generally speaking. Okay, bullish zone is equal to 40 and up. Okay, 40 and up, and hits over 80. I say 85 usually, like 80 to 85 or 80 plus. Now bearish zone equals to under 60, okay? Under 60 and can hit even 20s, right? That is what I always follow. So if you guys would like to confirm whether it is in a bullish zone or not, make sure it's over 40. If it's in a bearish zone, it cannot really be above 60. So if we look, for example, on a 30-minute chart right now, actually even on a 5-minute chart right now, it didn't even come below the 40 area, right? It actually bounced off of 48. So what I'm led to believe with the RSI right now, so let's say from here, we're in a pretty bullish zone, right? Now we're just waiting for this to correct a little bit, to come down. Notice that this one didn't even go below 30. Most of the time it'll go well below 30, like right here, if it's in a very, very bearish zone. But because this is not in a bearish zone right now where we're at, it didn't even go well below 30 at all. So don't worry, I'm gonna make a phenomenal RSI video for you guys to learn from it, and we're gonna go through different case studies, okay? So is this a really good opportunity to buy? Well, you guys know that I'm not a financial advisor in any way, right guys? So what I like to do is I like to point out information and facts that we see on the chart, right? And I'm never biased in one position, like whether it's long or short, bear or bull. What I do is I look at it from both sides, because if we plan, it helps us become better traders so we can react. So what we should never do is try to predict all the time and stay in that mindset of, oh crap, I went into this position, I'm now locked in it, what am I going to do? So what we would like to do instead is try to react to the market. So for example, guys, right away, if I went into a long position right here, okay, if I went into a long position and it actually ended up tanking for some reason, I wouldn't even think twice. I would make the quick reaction once I got the confirmations that it is now downtrending. I would just close my position and go short with it, right? It's okay. You guys can think about it from the perspective of one trade only to make profit, okay? It is the trades over time that get you your profit, right? It's kind of like playing a game of basketball. You don't win a game with just 1 point. You score several points throughout the game, right? Or like football as well, or any other sport, right? There are no Hail Mary passes, guys, okay? No such thing as a Hail Mary pass, right? There's not always going to be a shot at the buzzer. There's always not going to be like a penalty kick or something like that that's going to win the game for you. Sure, if you bought Ethereum at 2 cents and you bought like 1 million of them and you sold them at 350, sure, great. But in our particular case, if the market goes against us, guys, we have to learn how to cut our losses really quickly and realize that this one small loss does not make up It does not make your account, right? We cut this one small loss very quickly, and then we play with the trend. The trend is your friend. Cut those losses quickly if it is meeting your stop loss, and go with the trend, guys, because going with the trend will make you way more money overall, and it will make up for the loss that you made by cutting your position, okay? So that's what I mean by being very reactive. So right now, am I bull or bear biased? I'm bullish. I got no reason to think otherwise. This MACD looks like it's gonna explode soon on the daily chart, doesn't it? I mean, it might tick down. It's ticking up every day already. So I'm definitely bull biased here. I mean, if I cleared up everything on, no, I don't want to clear that. It takes me a long time to do my charts. I was just joking, guys. I'm not gonna clear it. So right, if I actually just did something like that, let me clear it up and clean it up a little bit here. My charts are really messy, but they make a lot of sense to me. Excuse me for the wait. Okay, so if I actually drew it right here, all right, so I drew it right there. Okay, see that right here? Would you guys agree with me that this is kind of forming a wedge shape? Right? We're touching this resistance, this one, basically this one as well. We're touching a lot of resistance points here, 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 right? Would you guys agree? Here as well, here as well. So let's look at it on the bigger picture and see what kind of shape it's making. Let's go to a one-day chart here. I mean, don't get me wrong. This is still a major resistance, guys, at $7. I'm talking about specifically where we stand right now in this point of time, that I'm bullish biased, because I think it will, in the next day or two, in the short term, I'm talking about, in the short to mid term, in the next few days only, I think that it will make an attempt to hit there. Why do I think that again? Because of this hammer candle that's currently forming in this specific moment of time. So if we drew a wedge, for example, okay, a wedge from here to here, just draw one big wedge right here. Would you guys agree with me that that's the zone that it's covering? So this is the zone that we're currently playing with, okay? This is definitely the zone that we're currently playing with, but where I could be wrong, and what a good trader will do, I'm not saying I'm good, but I'm saying what people in general should be doing is this, okay? If this was not B right there, take all of that mumbo jumble out, then this is B right here. Then that is B right there, okay? If this was not it right there already. And then what could happen, no matter what, is we're gonna test this resistance point. We're 100% gonna test it, and that point right there also happens to be these major points that are coinciding. Right here, major resistance, major resistance. Why do I say the resistance? It's because it used to be a support, right? It used to be a support, and what used to be a support now becomes a resistance. So that's really important to understand, that the region that we're playing in is this one right here, this green one that I've highlighted for us, okay? That's really important to understand, and this is the next really important key point. Now, they're going to shoot for this area no matter what, I think, based on the 4-hour chart of that hammer candle forming, that this could be the ABC correction right here. I should have got my dog to howl for you guys in this video, but she's now sleeping. I don't want to, I'm probably going to wake her up and make her howl for me by the end of this video, just for you guys, okay? So that could be the ABC right in there, okay? Now, if that is ABC, ladies and gentlemen, that this point down here could very well be C. So like what I mentioned is that as a trader, we cannot be biased to one specific position and be inflexible. We have to be very flexible with our decisions, and we have to be able to make them very quickly, right? So if it tries, if we do get more volume confirmation, I'm definitely going to play myself a nice little long position right here, okay? Now that we have it confirmed, let's see what the risk to reward is when we play it. But first of all, the criteria for me to enter a position is to break the 55 EMA on, say, a 2-hour chart. If it does not do that, I'm not entering a position. It needs to break it first. So my entry point will be 654 if it breaks it, okay? If it does, I will set my stop loss slightly below the 55 EMA. I have myself a chance to gain, let's say where the next resistance is, 12%, guys. There's a chance to win 12%, but make sure that you guys confirm things, right? By the rules that I was talking about. Make sure that there's a wick that will poke through the resistance and it gets rejected by the bulls. Make sure there's volume confirmation as well. And then you set your stop loss slightly below it. You get a risk to reward ratio of 4.15. You have a possible chance to gain 11%. Now, these are not financial advice I'm giving you. Once again, these are me suggesting positions that can be played, right? As long as you guys understand the risk as well, and you also understand the confirmations that are required, right? So we have to have confirmation before going to trade. Now, let's say that this ends up holding, right? Holding as in the bears are holding their position. Then what? Because we see this massive pattern forming right here, guys, and we're just going to assume symmetry. I mean, look how similar. Look at this line that I'm holding right here compared to this line, compared to this one. They're very, 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 very similar angles, right? Every single line that I'm holding here, here, and here, they're similar. So why would this one not be similar as well? Therefore, if this one does not make its way up there, if it does not make its way up there, then the second case is obviously this one, right? Where you would short it if it goes down more. Now, where would your short position be? I'm going to delete this to make it more visible. Well, you would, assuming the 55 moving average just keeps going like this, okay? Just keeps going like that. You would set your stop loss slightly above it, and then you would shoot for the next reasonable target, which is right here. So now your risk to reward is about the same as going up, actually. It's 3.87, your risk to reward. You have a chance to lose 4% of your position size, but you also have a chance to win 16% of your money, which is actually huge. So right now, as it stands, guys, you know what? I'm going to backtrack. I don't think that this is B right here. I don't think that that is B right there. Okay? Or sorry, I don't think that this is A, B, C, and I don't think that this is a small C, W, X, Y. It's just not proportional enough to me. I don't think that this is right, so I stand corrected. I take back what I said. As I perform new data or new analysis in front of you guys, as I perform it in front of you guys, I do believe now that we're going to make our way up to there. This could be it right here, A, B, and C. This just happens to be the first wave of the three, maybe going up. And I think that it might try to break here. See, if you guys notice on the 2-hour candle, we're actually getting this candle right here already. This one could be a dead man's hanging though. Dead man candle, dead man hanging. Let me show you. Actually, no, it wouldn't really fit in that circumstance. It'd be more so on an uptrend. Basically, what a dead man hanging is on an uptrend, you get a candle like that, right? And it looks like a guy that's hanging. But what I see right now on a 2-hour chart is that this is a really strong confirmation candle of support. This is another hammer that's about to form right now. On the 3-hour chart, excuse me guys, sorry about that. We got another nice candle there, hammer. Beautiful bullish candle there. Not that much volume, but that's okay. On the 4-hour chart, it still has a hammer. So I'm more led to believe that it is making its way up there right now rather than making its way down here. And I just can't help but think that, right? There's no other thing to think. Unless, guys, unless we're wrong. Actually, sorry, let me look at it. It's getting even bigger now. There's people buying, right? It's definitely moving up. Since we started this video, it's actually moved up 5 cents already, guys. So make sure you guys follow that rule. Like, it has to break the 55 EMA. Maybe not on a 4-hour chart, maybe like even on a 30-minute chart, right? We can get some confirmation, right? If we get some confirmation there, that'd be really, really nice. Not only that, let's check out Fibonacci, guys. Let's see our Fibonacci extension. We'll take it from the highest point to the lowest point, right? Right now, we're actually at about almost touching the 50% retracement. If we get to the 618, will break the 55 EMA, right? This one is still moving up there. The 1 minute one is still making its way up there and people are buying. So I do think that is going to try to test this resistance here soon. Okay, I do think it is going to test it, but if it doesn't, I want to be very clear that this is it right here, and this was C. This would be C here. Okay, we have an A, B, C, basically a double top is what we call it. Okay, if it does not give you guys more confirmation, then we're going to end up downtrending to basically to this point right here. Right here, unfortunately. So I gave you guys all the possible scenarios and what to look for, right guys? I want to make sure that we're all on the same page. If we do get more volume confirmation, and for example, in the 15 or the 30-minute chart, it breaks the 55 EMA, absolutely, it makes sense to go long to shoot for this target. How is that target derived? That target is derived from all these relevant resistance points, right? All of these ones that we see. If it does not give you more confirmation and we downtick, then we go into a short position and using the same ratios and also staying in the same pattern. Unfortunately, guys, we might even make our way down to $5.15. And that is both cases that I have given you now. So I hope that I have been insightful and helped you guys out as well. Make sure you guys play extra safe and cautious. Make sure you always look for confirmation. Never buy into a position and hope. That never works when you buy into a position and just hope. Make sure that we're slowly buying and accumulating, right? And then if there's a lot of strength, then that might give you more confirmation as well to go into a trade. So we got both cases, guys and girls, going up there if we have confirmation, but if we have any rejection, which during the making of this specific video right here, there's no confirmation of any rejections at all. It's a very strong support from what I see, okay? It's a strong support. See, we're upticking again, guys. Like we've already upticked uptick 0.6 cents right now, and since the beginning of this video, it was at $6.28. So not bad. Yeah, it was right here, 6.26. We have literally gone up 7-8 cents already now. Not bad at all. I'm pretty happy. 5-minute chart. Let's see what's going on. You guys see it bullishly diverging still, right? It's making ground there. It's staying above this area. On the 3-minute chart, it's definitely staying above 40 as well here. Our size on, it bounced off of here already. It's got to at least make an attempt a little bit. So I'm going to wait for some confirmation on the 15-minute chart. That's going to be my trigger chart for here. If it breaks above the 55 EMA and the bulls reject the bears, I'm definitely going to shoot for this target for 725. So my target is right around, entry 653, and then I'll shoot for around 720. That's a really good profit, 60-70 cents, right, per coin. That is an amazing profit. But if we get confirmation more of a downtrend where volume starts to heavily pick up and people start to sell, then we might actually not even make it there, guys, and we might make it all the way to over here, which will be pretty sad. That could be somewhere around November 15th. So if you guys like this video, you guys know what to do. Subscribe, follow me on Twitter, follow me on YouTube. If you guys absolutely love this video, make sure you guys send my little puppy. I have a piggy bank for her. She has her own exchange, believe it or not. She's got her own little piggy bank of cryptocurrencies. My address is below. Send her a tip. Take it easy, guys. Have yourselves a great day, and thanks for watching the video. Bye now.